Thanks a lot for all of you attending our last event of the year, sponsored by the Financial Policy Council and mBank. Big round of applause for mBank. And a special thanks goes to our board members and the Project Liberty team members, which is growing by leaps and bounds. Just to tell you a bit about the Financial Policy Council for all the people who never attended our events in the past. We're a 12-year-old nonprofit 501c3 organization. We're not a political organization. We're here to search for the truth and empower people and find solutions for very thorny problems. We're capitalists. We're wealth creators. We're not shy about it, and we're not gonna apologize for it, that we are capitalists, especially in times like this. We've survived 12 years. We have today over 300,000 followers. We have 72 corporate sponsors. We're growing in the middle of a blue state called New York City, despite all odds, because we are relentless people, high achievers. We like success. We want every one of you to be a millionaire or a billionaire. Screw them. If you don't have this attitude, you're not going to go anywhere in life. It doesn't happen because Jesus wants it, or because God wants it, or because it's the right environment. It's all because of you. It's all boils down to you. This is a platform that provides you with the power to achieve this through our events, our webinars, our writings, our blogs, all what we do for the last 12 years. This is an organization where each one of you should support, should be part of, whether on the board level, as a member, as a corporate sponsor, etc. We cover every single asset class. And the theme, unlike most nonprofits, they tell you some bullshit theory about which you can read in the Wall Street Journal. We're not here, we don't do or talk about things that are discussed in the Wall Street Journal, because we're very controversial. We're mavericks. We want to rock the boat. We want to create solutions. And you have to rock the boat to create wealth. Wealth doesn't happen by accident. And it's all about wealth. Because money is about freedom. It's not about anything else. It's not about how many cars you have, planes, jets, yachts. This is all bullshit. It's all about being free, prosperous, being able to provide profusely for your family, your community, your loved ones, etc. That's capitalism. They vandalized the word capitalism by making it bad. There's nothing bad about it. Nothing. Rest assured of that. I've been rich, I've been poor, and believe me, there's a huge difference by being rich and poor. And I want to always be rich, not rich, filthy rich. And all of you should aim for that. For the sake of freedom, nothing else. We all came to America at different stages of our life for the sake of freedom, opportunities. Today they want to kill this American dream. We're not going to let them kill it. We're going to fight hard to make it happen all the time. This is what the Financial Policy Council is all about. Empowering people, creating wealth. We have, over the years, talked about many subjects. We did events on cannabis, private equity, real estate, renewable energy, Bitcoin, now fintech. We cover every single asset class. And the way we tackle this, by inviting experts in the field who are entrepreneurs themselves, who are achievers themselves, whether they made it or they lost It's okay if you lost. You learn a lot from the failures. As a matter of fact, we only learn from your failures. You never learn from your successes. It humbles you. It makes you more eager to succeed. It's okay. We don't blame people who failed as long as they keep going. That's capitalism. That's wealth creation. So we tackle every asset class, and we discuss with the panelists and with yourselves, and you can watch all the videos we had in the past, ways of creating wealth. Ways that are not publicized in the media. The Wall Street Journal, all these people will never tell you how to create wealth. All these people in government, they want you under their thumb, asking for handouts. Thank you, Mr. President, I'm gonna wear a mask, I'm gonna shut the fuck up, and I'm gonna stay at home and do nothing, waiting for your orders. You will go nowhere doing that. It's time to rebel in a smart way, create wealth, team up with the right people, build your network, and make a killing. There's nothing wrong in making a killing. There's nothing wrong in acquiring freedom. And whoever says so wants you down. And whoever is trying to lower your standards, lose him. Lose him or her number. Everybody's here is to collect names. I have 30,000 connections on LinkedIn and 20,000 connections. This is crap. Have you monetized your contacts? You only need 50 people, top-notch, who are like-minded, and you can make billions. 50, not 30,000. So stop with this numbers game. Stop following the crowd. Stop listening to these morons, whether in the government or in the private sector. They're not that smart. And if they were that smart, they will be there in the private sector making billions. These are the smartest ones. Oh, it's all about money. Of course it's all about money, because money is about freedom. What is it about? Happiness? You want happiness? Make more money. You will never have to think again about happiness. It comes. Anyway, I don't want to do a long speech, but you get the gist of it. We are the most capitalistic, non-profit organization, fiercely independent, non-political in the United States. There's nobody like us. I've done my homework, we've researched, nobody. They don't dare saying this. They don't invite panelists like this to speak and have the audience participate. The audience at these non-profits out there, they're all about, they listen, obedient to what the chairman of the organization says. No, I want to hear your voice. I want to hear your frustration. I want to see you pounding on the table. I don't care if you use foul language. We're not here in the style mode. We are in the substance mode. If it helps you express your feelings better, do it. That's the power of expression, the power of capitalism. Time to wake up. So, the event today we have is all about examining insider secrets of creating, licensing, and operating digital financial services to create wealth. Like every event, it's all about creating wealth. So we will show you how to join the financial industry, starting at the very top as a founder and owner of your own digital bank. Stop working for companies, okay? Start your own company. The only way to build wealth is to create your own asset. This event will show you exactly what it takes to build your own bank. M-Bank's C-suite executives and banking service expert will teach you and every aspiring entrepreneur about the realities of the digital financial world. mBank has already created and operates over 50 banks and credit unions in partnership with its clients. So they are truly a role model. And this is the kind of guys we bring, people who have done it, who are in the trenches, and who are succeeding. Not professors at the liberal college of Harvard who know shit about that and who study it by theory. They have no skin in the game. These guys have put their own money into that. I have zero respect for somebody who pontificates about wealth creation and has no skin in the game. It doesn't mean nothing. If you don't have skin in the game, you're just pontificating. Like most of the lawyers, doctors, scientists, professors, they pontificate. They have no clue. They never put anything at risk. These guys have their money at risk. So, this is all about business, folks. Governments and activists don't build successful solutions to problems. Businesses do. Now, you're going to find out if you have what it takes to be the next owner of a digital bank, and we look forward to your active participation. So the way it works is like this. I'm going to start asking the panelists some questions, which they're going to address. Then I'm going to leave you to address questions to them, so it's very interactive. It's not just coming from me. You can ask any questions you want. And there's no stupid question, and there is no controversial question. Just get it out of your system. Ask them. Act like an owner. Act like a capitalist. Be bold, be daring, ask the question. Yes, this is on video, so what? This is on video. It's going to be distributed to thousands of people. I don't give a rat's ass what people think or are going to say. I don't care, and this is what you should do. Because the more we push forward, they're not going to dare coming to us. Most of the people don't push, they push back. You don't. This is war. Business is war. You are a gladiator. Business is war. You either kill or you die. That's my philosophy, at least. I came here as a legal immigrant 35 years ago with very little money, and I built a damn empire because of my perseverance, my relentlessness, and I don't give a rat's ass what people think. I'm a capitalist. I don't give a rat's ass, and this is how it should be with each one of you. Time to wake up. So our panelists today, let's now go into the core of things. I think you get the message. Our panelists today are Eraj Akhtar, who's a fintech investor, who's a chief futures officer out at Crown Point Technologies. A big applause to Akhtar. Vladimir Lounegov, my old-time friend and a board member of the Financial Policy Council, fintech inventor and CEO of mBank. Rachel Moore, president of Carbon Blanc. Big applause for Rachel. Lars Rottweiler, CTO and co-founder of mBank. Lars, why did they put you here? Okay. Good to have you here, Lars. Long time no see, by the way. And Sergio Terentev, CEO and founder of B9. So I have a few questions for the panel. You can answer the question in the order you want. And then I'll leave it up to you to answer some questions. This event will end at 7:30 p.m. From 7:30 to 8, we can have a small break for half an hour. 8 p.m., Vladimir Lounegov is going to speak for you regarding the profitability of digital bank and how they make money, because this is all what you care about. How do you make money? and you came here because you want to learn about how to make money, not because you want a theoretical explanation about the fintech industry. Who cares? And then we'll end up the event at 8:30 p.m. Then there's going to be a dinner just for the panelists and a few friends, board members and others, at a close-by restaurant. And that's pretty much it. This is the last event of the year. We usually do events every 6 weeks. Last event was on September 29. We did an event on renewable energy under the leadership of our board member, Tim Kalen. Where's Tim? Here you are. Next event is going to be on the metaverse, very hot topic. All what's happening today is going to be sometime in February. We'll keep you updated. We have your names, we have your numbers. So, if I start with you, Vladimir, and we can go down the road here, the lane. How do digital banks work versus traditional banks?
Yeah. Thank you very much, Ziad. Can you guys hear me?
Can you hear me? Yeah, go ahead.
Okay, perfect. Well, first of all, I just wanted to say thank you to the Financial Policy Council for having us here. I am an entrepreneur, and then my co-founders, Lars and others that you've seen here from mBank, we're all entrepreneurs, and we're also very pleased that our clients and partners with you, they're also all entrepreneurs. If you look at our history, and then I'll come to the question in a second, we all come from traditional bank, well, a lot of us come from traditional banking backgrounds, or we also come from technology backgrounds. So mBank is at the intersection of banking and technology, and we came to be because we know, or we saw the world the way it used to be, and we knew that there must be a different way. There must be another way of doing things. And so this is how we got together. Now, how do digital banks work versus traditional banks? In the United States, you will see that the banking sector generally has become quite bifurcated. You have traditional banks that continue providing products and services in the way that they've done for many, many years. And then you have challenger banks or newer banks, like Chime, for example, that's been on people's radar, Moneyline and others that have now attracted $1 billion in valuations. They've attracted tremendous amounts of money, and they've created a lot of wealth for their stakeholders. So we help launch and bring to consumers banking business. So mBank has been created to launch and operate financial products and services for our consumers. So how does digital banking work? In the United States, the traditional banks would always start by acquiring a license, whereas the challenger banks oftentimes, or most of the time, use a partner bank as their license sponsor. And you need this because at the end of the day, in the United States, to acquire a license is almost impossible. It's a very complicated process. It's expensive. Nobody wants to go through that. And then, of course, compliance is key. So our world of digital banks is where compliance comes first. The services that mBank provides help everybody stay compliant, and this is how we deliver financial products and services to our clients and consumers.
You want to add something? Any one of you?
I think on the digital banking front, it's important to realize that traditional legacy systems are outdated. They're antiquated overall, and we need to focus our efforts in being able to upgrade systems. A tech stack like what mBank has built helps to create interoperability and to be able to create a system that is inclusive of the entire technology platform. So that way we can speed up transactions, be able to deliver value to the end user at the quickest rate possible. And that's really what digital banking is about. It's to lessen the load on traditional financial systems and move into something that's very internet friendly, very mobile based, and is evolving with the times that we are living in.
Great, thank you. Okay, now, how do the digital banks make money? What are the risks involved? How can I join the party? And how much will it take me to join the party? What are the barriers to entry?
Well, I can start.
A lot of questions. You can start, whoever. Rachel, you want to, whoever. Lars, whoever you want.
Well, we're direct to consumer, so not the B2B, as for example Vlad, the business, the type of business they represent. So I think the overall incumbents are not that bad in terms of in terms of like the consumer fintech. So I think it's a little bit opposite to what, especially last few years show that incumbent banks are doing pretty good with the consumers. So it's that's my personal take on that. So I think the difference, the main difference, and how we make money different to what the banks are doing. So I think it's the same business model. So nothing we invent in this sense, nothing different to what hasn't been invented during the last 500 years of banking. So it's the margins, it's the lending, it's the deposits, it's pretty much the same thing. I think the main difference, is adding to your first question, is what type of data we're using in order to build the bank. And I think here is the biggest difference and the biggest disruption. Like in our space, we built our bank based on not based on the credit reporting system, which is a traditional way how you score people, how you assess the risk, etc. So we focus on your employment data and your employment history. We don't, for example, look at how you service your loans, or whether your history of your borrowings before. So that's not something we're interested in, particularly in our demographics. And that's why, for example, we don't compete with any of the existing financial institutions. So because we focus on a completely different source of data. And so I mean, for us, the difference would be not in the model itself, I would say, but in the type of data that we use in order to build the relationship and build the bank. And this is what we do, and incumbents don't. So that's what I try to answer.
So what makes you different? Why would somebody go to you versus a traditional bank?
It's we're very specific. Like, we're working in a particular niche, right? And I think niche is great, and and the competition is for losers, honestly. So you really, if you want to,
what is that niche?
That niche is the demographics. Basically those who are either recent immigrants or new to credit, or those who were young workers. Those who never used a credit before, so they just didn't have that. Thin file. It could be no FICO, nothing bad. Just they're not yet there. So that's the probably 80% of our demographics. People from 18 to 35. That's probably represents like 90% of our client base. If I go and try to pull the credit data, I probably find very little information for myself, and we will not be able to do anything with that. And that's the typical incumbent bank approach. So they go there, they look there, and they find nothing, and they reject, right? And they say basically they have nothing to provide. Yeah. They say it's nothing bad. It's nothing. Well, I think it's wrong, but I mean it's their risk appetite, right? But the system makes a lot of people underbanked or unbankable. So right. So I mean, you probably will not get any financial product. You may have a bank account, but you don't have any credit card, for example, there. Or your credit card is like, the limit would be tiny. So and so what we do, we simply, since you work and you do pretty well at your employment, our technology allows to parse your employment file and basically see which is a permission, as a customer permissioned access to the data, of course, to see, your employment history, how much you make, where you work, if you change jobs. And then that information for us would be sufficient to understand also after we onboard you, how you pay your bills, how you pay your rent. So building creditworthiness based on your transactional data instead of your past credit behavior, right? I mean, like whatever.
I get you.
Yeah.
So basically, your client is a young chap between 18 to 35, tech savvy, who has a job, who has income, not necessarily a credit history, doesn't matter, who's a solid citizen.
Oh, yeah.
And who's moving forward in life.
Oh, yeah.
And you don't have these restrictions bureaucracy that the banks have?
Well, bureaucracy, I would say that it's pretty much the same. I mean, like everything, if you onboard someone online, so it's a pretty much the same set of data. You need to just to understand who that person is, and that's the most standard KYC process that I think we also have to follow because of the regulation.
Go ahead.
Yeah, no, that's the answer. So in terms of the bureaucracy, I guess it's the same. And
well, bureaucracy, I think what Ziad was referring to is in the past, we would have to go to a branch to originate a loan.
Oh, yeah.
Right?
No,
I think so. And you guys, you issue a lot of loans to hardworking Americans to help them between their paychecks. So now that in the past was either impossible or that service was just not accessible to banks. Banks just don't do it.
Oh, banks don't look at this segment at all. So they just don't do it because of the, as I said, because either the thin file or something else. So they just this group of people, these demographics is invisible. Again, it's not the bad intent of the bank, but it's just because the way how they.
It's very clear.
Yeah.
It's very clear. We don't want to beat on a dead horse.
Right,
That's perfectly clear. What are the pillars that underpin profitability?
In our case, the business model. It's we don't charge any interest rate, so I mean it's zero APR. So for any of the financial products,
You don't charge any interest rate.
no, we don't do it. But since but there is of course a monthly plan, and that monthly plan includes a lot of features. And part of it is also your early access to a paycheck. Yeah.
I can also add to that. Also, is that okay to add? Ziad?
What?
Can I add to this?
Yes, of course.
So, so if you look at
No, you're banned.
there we go. So, so typically profitability in any lending operation is a function of loss ratio. If you can control loss ratio by understanding the consumer behavior, so this is what you were talking about, the data that you get, the employment data, how they pay the bills, are they always on time? So that creates significantly lower loss ratio, or at least a perception of risk that banks otherwise don't get, because banks are not interested in your data. They just don't know what to do with it. And if they did have access to all the data, and they have access to all the data in the world, they still wouldn't know what to do with it. So that's why once you understand a creditworthiness of a consumer from your perspective, this is what drives your profitability, right? Because otherwise, at the end of the day, it doesn't matter how much you charge them for interest or for monthly fee and so on. If they're not profitable, or if they are not creditworthy consumers, then you will never make money.
No, true, absolutely, yes. No, that's totally, yeah. And then we were good, at least, so far at predicting that propensity of a person paying us back or not paying us back based on as I said, on the very straightforward information like your employment and your transactions. So, and it's easy. I mean, it works. At least, in our case, it works. So we see people, as I said, people paying rent, people paying bills. That's what we see inside the bank. People using, like, swiping the card or making the payment. So that's and you can build your algorithm and scoring models around just your day-to-day transactional things. And so, in a sense, we are creating what the banks call prime segment within the demographics which have been just underserved, just overlooked before because of the credit reporting system, because of how the banks assess or score them, and they score them differently. And we do it differently, but we can figure out that there are a lot of prime behavior, very good customers, which could be potentially customers of the same banks if they would, do it differently.
So how are fintechs valued? How do you raise investors' capital?
So far it's equity, so we have funds, VC firms, investors, it's all with typical venture, venture capitalist project. So we do like, yeah.
So they value this what, based on your lending?
Oh no,
Would lending increase valuation?
It's complicated. Well, it's
just make it simple.
Yeah, simple is because they value on your revenue basically.
Okay.
Yeah, so you have like certain multiples. It depends on the market situation. So,
Yeah.
but it's multiples to your revenue, like at least on the, let's say.
And usually the multiple is how many times revenue?
Wow, it's changed so drastically. I would say.
I mean,
it's
I'm
hard to
talking
say
about
right
a
now.
typical, fast-growing, profitable bank.
21, we were seeing multiples like 70, 100 revenue.
70 times revenue? This is insane.
Yeah.
Yeah, Moneyline was valued at 64 times revenue.
Right
So-
now, if you're asking me right now, so probably 80% of this, 20% of this?
20 times?
Yeah. No, 20% of that. So it's basically like
Oh.
5
4
times
4 or 5 times, okay. It's a bit
lower.
Yeah.
So
4
we're talking
I'll go,
about
gotcha.
maybe
Wow.
10. So to be like,
Well, I think it also depends on the kind of use case and the technology
yeah.
stack,
It's
right?
a lot of,
Specifically with CrowdPoint, what we've done is in the banking space itself, Vlad, to your point, where banks don't know how to monetize data, and we do, right? We're a data company that's coincidentally built a bank around some of our operations. So we've been working in a space called identity banking, and that's where the information and the purchases that you make combined to be able to forecast your specific behavior, your propensity to pay back, propensity to buy some certain types of products that are out there, and being able to direct and personalize those purchases in the near future to you as a consumer. So being able to really give a hyper-personalized kind of response. In that space, we can command a multiple of 50 to 100x, but that is because we are able to garner value from our database, right? We have a database that's 2.5 billion plus human identities, and on average, we store records about 2,700 attributes per person. Now, being able to consolidate that, be able to predict what it is that you're going to buy, help make those recommendations to you, that's where you create value. That's where you create wealth, because you know where your target's going to be, and you're going
That's
to move in
very
front of them.
insightful. So what you're saying is that what drives up valuations is the gathering of the data,
Gathering of the
much more than lending.
Much more than lending. Lending is an important part of it.
Yeah,
one of the-
please, could you elaborate on that?
So the term really that's kind of been thrown around recently is embedded finance, right? Embedded fintech, and being able to incorporate all of these technologies from payments to banking to having an account with the brand that you trust in one solution. And you'll look at players like Amazon and Walmart getting into it. Why traditionally banks and retail were separated, but nowadays we've come into a system where you can combine those and give the consumer a one-stop shop. And that just makes it frictionless. It makes it easier for consumers to know someone that they trust is handling and helping manage their funds. And what it really boils down to, how do you monetize that, is get the customer what they want, right? It's improve customer experience. They're going to come back. You're going to have repeat customers, and that just increases your bottom line.
Very nice. Okay, I'd like to hear a bit from Lars and Rachel, their take on all of this. I don't have a specific questions for you. You saw the questions addressed. I'd like to hear from you a bit, since I haven't, and you, Lars. Rachel, ladies first.
Sure. So Carbon Blanc's focus is accelerating sustainable initiatives through the convergence of fintech and clean tech, and how
I'm sorry, conversions of fintech and what?
and clean tech,
Clean tech,
and
sorry,
clean
yeah.
tech, and so we're really an ESG focused company. Oh, sure. And so there is some cost savings there with digital banking. So as I have a background in architecture, and reducing a building's environmental impact is difficult physical and costly. So as a digital bank, you don't have those costs. You get to keep all of that money. There's less paper. You save trees, and also the technology is cutting edge, and so there's the energy use is greatly reduced there. So. Our consumer base is already ESG aware, and so they're coming to us for things like solar loans and electric vehicle loans, and we're able to not only help them in their individual desire to impact climate change that way, but we accelerate that impact because we keep the revenue that would have been lost to a more traditional bank within our ecosystem, and then we're able to infuse that back into the green bond market and our own clean technology. So really, you know, Elon would say that even with all of his initiatives, he needs to do 10x more to be able to make a real impact on the environment, and we're trying to do that. We're trying to give people a better way to make an impact through banking. And a lot of other banks are looking at their own lending portfolios and really seeing who's banking with them and where they're going with that to clean up their act.
What's exactly the relationship between your company and mBank? How do you interact with mBank?
mBank is our banking as a service, our compliance as a service, our lending as a service. And so we are able to, because I have these guys for that, I am able to focus on my clean tech and really focus on our values, focus on, like Eraj was speaking about, our customer experience. And people these days, 9 out of 10 US consumers are already using financial services through an app, and they want to stay in that experience. They don't want to have to go out and go somewhere else and stop and do all of these things. We want to keep them focused and within the brand, and I think that's where fintech is going.
And I guess, Vladimir, you have a lot of relationships with 50 such institutions, isn't it? That you bank, that you lend, that you as you said earlier.
Correct. So we have we have the full spectrum. So we have traditional financial institutions, boring. We have credit unions. We love credit union movement. So let's say, hey, we have credit union clients. We love those. And then, of course, we have the fintechs, right? And the fintechs, they all have something special in mind, and also they're very close to us in our heart because they're all entrepreneurs. You know, they want to make. I get you. You understand, right? So they want people to make better choices. They want to create brands, so people are proud to carry that brand in your pocket, for example. And then through all of those initiatives, they're trying to create wealth, but also at the same time making the world a better place.
Then fantastic. Lars, you want to add a few things here? Okay.
There we go.
Otherwise you can hear me, right? All right. So obviously that table shows what mBank is about. You see an incumbent attacking a classical bank with retail clients, and then you see a eco bank. You see a blockchain-driven digital asset bank. I would even call it marketplace, going to disrupt the stock exchange as we know it today, right? And they could talk hours about this. Every one of them is on the same platform, everything using just mBank platform. And that makes it so kind of cool because we have not only those three here, we have 50 plus, and we cannot mention number here, is actually much more than 50 plus. We open every week 1.3 banks right now, and all of them with their own story about how to drive the financial market in the next years, right? Obviously, a lot of them out of the US, but we are international. We are operating globally out of different reasons. We want to have not only, let's say, the market space as a global market, but also we want to get the trends out of it. Myself, I'm based in Dubai. I think it's what the Wall Street used to be in 1972. It's capitalistic like the Wall Street 1972, but everything, all the topics is about banking, fintech, crypto, tokenization of assets, about what is the money of the future.
I love it.
Can I talk about the money of the future?
Please.
So, Ziad, what was the first currency ever used? What was the first money people used?
Gold.
Salt. Salt is good. It was actually seashells. Seashells. They started everything with seashells. Problem with seashells is on the hand, right? Some smart guy comes around the corner, finds the beach, where finds the seashells. So it's not unique, it's not a function, it's not a tangible asset, right? It's easy to replace. So then you come up with the gold. The gold was somewhere here too.
Gold is money. Everything
Gold.
else is credit.
Thank you. So that's actually my point. Gold is money. Gold had about one issue. It was too heavy to carry around.
True.
So what did they do? They put Fort Knox up, put the Federal Reserve Bank up over the world, put the gold inside there, and the same equal money of gold, they printed on a little slice of paper or a lighter material as a coin and put the people in the pocket. What do they do today? They don't put the money anymore, the gold anymore inside. Now they put just a paper inside, write on it, okay, that's the equal value of $1 billion. Just a paper. That's useless. So money goes into inflation in about non-believable. It's not a tangible asset anymore. Now we look at the coins. Coins doesn't have a tangible asset. Coins is just a Ponzi scheme. But if you look at coin combined with a tangible asset underneath, like any kind of a commodity which backing it up, or like a real digital security, what CrowdPoint does, they tokenize factories, they tokenize real assets, real estates. Then you have a tangible asset underneath. Makes it believable because it's not something which just falls off on the beach or it's just a paper in the safe. So that's why we strongly believe that we drive at mBank in the digital asset and banking space, those kind of the future of currency, the future of money, the future of wealth and future of capitalism, right?
I love it. Thank you very much.
I go back there. See you
Very
later.
good,
Thanks.
Very good, Lars. Thank you. So, what's better, growth or profit?
Well, if you ask me, I would say you have to be profitable, and you have to find the balance between.
Thank God you said that.
Yes. That's one thing about mBank. So we broke even maybe in our third year. So we're in our sixth year. So we've been profitable already for about 3 or 4 years, which I think is very rare in the fintech space generally. But we were from day one. We knew that if we're fundraising and to your earlier point, we never fundraise from VCs because VCs they tear young companies like us apart, right? So we fundraised from believers, people who already believed, people who had trust in us as the founders. They knew exactly what we were doing. They knew where we were going with it, and they were able to write check. So at that point in time, we made them a promise that we will not burn money, we will not fly private jets. We will continue being humble, and even when we are successful, we'll still continue operating like a startup, with a startup mentality. Yeah. And that helped us immensely. And so the last 3 years, we've continued being profitable, and we're growing really fast. And I just wanted to ask, how many of you are either clients or partners of mBank or already work with mBank? Show of hands.
Well, we have to have them all work with mBank.
All right. Oh, no, thank you very much. So I think that's growth. Thank you. Growth has to be profitable. It's a must. And also, whatever you do in your investor story, it's a promise that you need to take to heart. You cannot undermine investor confidence. And then if you have investors that believe in you, let them continue to be proud of you, and let them continue.
That's the key.
Exactly. Thank you.
Okay, I mean, look, finance is highly regulated. How do you navigate in that environment of a bunch of bureaucrats who don't want to empower the newcomers, who are threatening the establishment, who are making waves? They will find any excuse to put you out of business. How do you navigate that? Do you work with lobbyists? Do you work with some other people in the industry? Or you don't really try to rock the boat a lot by abiding to the letter what they say? How do you navigate? Briefly, any one of you.
On this one, the support really comes from mBank, right? You're still in a very regulated, tight, knit space.
You're in finance, of course.
You're in finance, and it needs to be so. So the KYC, AML elements that are there, you have to pass as a owner, any kind of beneficial ownership that is representative of your company, all must pass that muster. But at the same time, this is what mBank is great and excels at, being able to deal with the compliance, get you through the hardships of that entire approval process. I mean, sometimes it's a couple months, sometimes it takes up to a year. But you can work through those nuances and make sure that you have a solid team helping support you. That way you personally don't have to navigate and learn an entire new industry. I will say this, we coincidentally fell into banking through relationships with mBank, and it's been the most pleasant journey up until, even today. We have so much enjoyability just being able to talk and share the same values, share ideas on how to grow the business, how to remain profitable, and to improve the overall customer experience. So the heavy lifting gets done by the team at mBank.
Rachel, you want to add?
Yeah, I'd echo the same. They are right there with you, helping you with your policies and procedures and the training for your staff. So aside from having the peace of mind that they're there to really provide that compliance for you from A to Z, they're great in all of the services that they provide.
Yeah, same here. It's compliance. So we use a lot of the compliance team from mBank to help us, and also in the relationship with the license sponsor. Same.
So what's the blueprint for success? What you discussed over the last hour, or anything you want to add, all of you? In a few words, what's the blueprint for success? What comes to mind, the first thing that comes to mind?
I only have complicated questions, so someone can say.
Well, I can tell you from our perspective, and look, and thank you very much for your feedback. So we realized very early in the process that if you're operating banking services, you have to be compliant. So irrespective of regulatory environment, sometimes I feel it's like weather. It can be good weather, it can be bad weather, but you still have to stay compliant. And then sometimes in the United States, there's just so many regulators, you don't even know who regulates who at the end of the day. So to navigate this you got it, right? To navigate this complexity is really tough. And sometimes people come and say, hey, how come you've been successful over 5-6 years, right? And we say, no, it takes decades. Myself, Lars, others from mBank, we've been working in this industry for decades. So, but now we're able to navigate it, and we're able to simplify it, and to deliver it to our clients.
So I want to ask you one last question, then leave it to the audience. So if you're approached by a family office and they want to invest $100 million in your space to go and kill everybody, to go and be the major dominant players, how would you use the $100 billion, each one of you?
Well, before the...
Not venture capital, not nothing.
Okay.
A friendly, no. Screw venture capital. A friendly source, a white knight, who comes in, he says, you know what? I like what you do. You're very diligent. You've survived it all. You're compliant. You're very driven. You have a good team. Check. I really want to be in that space. I'm a big family office. I want to put $100 million to play with that. By the way, I will monitor you carefully. I want a board seat. What are you going to do? Give me your best sales pitch.
I could start with that one.
That's the ultimate luxury.
It's the ultimate luxury.
But it's pretty challenging because he's going to be very careful about what you say and how you're going to say it. And your true character is going to appear by answering this question.
Fair enough. The pressure is on.
You see this kind of money.
Let's see if we crack over here. There is money that always and constantly needs to be invested in your business, in innovation and being able to deliver the best product to the customer, being able to create new distribution channels. And for us, that is a mix of having the right engineering and the right creative team to innovate not only on the technology itself, but then being able to innovate the message and be able to iterate through the entire life cycle. How do you get out to market? How do you talk to your consumer? How do you relate to the consumer? What emotions are you evoking? How do you get them to participate? So $100 million spent on improving product, customer experience, creates your word of mouth, Stan, to your point, so that people keep coming back. They go out, make a recommendation to a friend, and you acquire new customers.
Yeah, but this is too broad and too generic.
Too generic?
Break it down. How would you spend $100 billion? How much on staff? How much on technology? How much on public relations? How much maybe also on buying competitors? With $100 billion, you can buy competitors. Be very creative.
In our current state, we've allocated about 10% to go out and buy and make investments in strategic partners. Some of them we've bought outright at CrowdPoint, and we've seeded several companies. Most of our money goes towards technology development, R&D, but that is a human capital expense, right? It's not so much that you're out there building hardware, you're building new software.
So when you say most, what percentage?
That is about 50%.
Okay.
Yeah. And the remainder goes into operations and marketing. Marketing is a very important cost center for a business, so that you're communicating, building awareness, and getting out to different audiences, making sure that whatever message you're putting out there is resonating and creating a feedback loop, right? So being able to create a system.
No, I understand. It's perfectly fine. Wouldn't you look at some acquisitions of cash flow companies that can scale you much more aggressively if spent properly? Of course, there's a corporate culture issue.
It depends on the alignment, right, with the company. As long as it supports their synergies there, then yes, that makes sense. But there's other ways to create growth and wealth within.
Okay, I appreciate you. Vlad, how would you respond to this?
Well, I would say that before the FTX fiasco, I would say if you gave me 100 million, I would probably invest it in some kind of a crypto project, maybe a crypto exchange or something, right? I mean, nowadays I would still invest it in infrastructure because that's what we understand best. But at the same time, obviously, there's no shortcut for compliance, so we continue investing in people. Compliance comes, unfortunately, right now still through knowledge. You need to acquire knowledge. Knowledge is expensive. People are expensive. Despite good people are expensive, yeah. Despite of the fact that if you switch on television, you hear doom and gloom, but it's to find good employees or good people to work with you is so hard.
Rachel?
Well, I think that our chief scientist for our microgrid technology and optimizer would want to use that money for R&D to accelerate everything he's doing. Solar technology is really outdated, and so we could instead of 10xing the speed to get to carbon neutrality, we could do it in a shorter amount of time, quicker, faster, more exciting technology.
Yeah, no, it's we're very. We're dependent on the technology, so engineers and software engineers, data engineers, I think is key. So that will probably eat a significant portion of that. So then we also, I think part of it would probably go as a debt to build portfolio. So that's something we also depend on. So our business model in particular, marketing, and then as soon as you spend on product team / engineers, so marketing is buying customers, is also buying leads. This is key for us as we're consumer fintech. So,
thank you. Last but not least, Lars.
So, if you look on our website, we have two products on it. One is called mBank Cloud. The other one is mBank Sky. So, obviously, when you have mBank Sky, you want to run your bank in the sky. And I would probably put a bank on top of a satellite because it's an unregulated market. I could do what I want with it, free from all kind of influence from any kind of company behind. So, I think that's a good spend for 100 million. Don't you agree?
I love it. On Mars. Put it on Mars.
Thank you, Lars.
Lars on Mars.
Lars on Mars. That's a good one. All right, I'm going to leave it now to the audience. I asked my questions. There's many more, but I think it's time for you now. So we have half an hour, for you to address any questions you have for the panelists. It can be for somebody specific or all four of them. So who wants to start? Stan. Huh? Stan, we can't hear you.
So maybe...
Could you give him this, please?
Yeah. No?
Oh, but it's okay. Lars, can you pass this to...
Okay, that's fine. Thank you.
So if I understand this correctly, Vladimir, your company is a supplier and you supply services to each of these companies. So for these companies, right, before I lend you Ziad's $100 million, I want to know, what do you expect?
Before you lend him Ziad's $100 million. Thank you for acting on my
What
behalf.
can I expect year over year to get in terms of ROI on Ziad's $100 million?
Good question. What return on investment are you willing to provide me for that?
So I think that amongst all of us, I mean, I think we have different profiles, so we can talk about that a little bit in a minute. I would say that right now, what works really well in the current environment is lending. And the second part of the event, we'll talk about lending as a service. This is our new natural progression, I would say, in banking as a service. So lending currently provides significant yields. There are ways of parsing and analyzing the data that creates I would like to call safer lending, but it creates much more informed lending, and lending decisions and underwriting decisions are now done in a different manner. So I think that the highest yield in this whole fintech scenario today, given the economic situation, would come from lending. Now, if you ask me the same question about a month ago, I would say crypto, that should be on the radar because that will provide higher returns on investment. Infrastructure, so clearly mBank is a services company. We started off as a technology company but moved more into services. So now we're completely a services provider. Services also yield higher returns on investment. So I would say anything to do with services, specifically lending, and you would probably expect double digits. I would say double digits, fairly steady returns.
Double digits meaning 10%? Double digits meaning 80%?
No, you can do 20% return on investment sometimes in certain areas.
So let me ask you, talking about lending, because we do lots of lending. What LTV ratio you use? What's the percentage? 80% LTV, 90%, 60%?
So it all depends on products, right? So if you look at crypto lending that just exploded or imploded, right? So they started off about 5 years ago. Some of our early clients, they've provided very low loan to value ratio. So they lent about 25%, like Tether, for example. So they lent at 25% loan to value that in those days, and then over time, some mavericks, including, I would say, FTX, they increased that to a very high proportion. So I personally would say that it has to be, loan-to-value ratio needs to depend on the program, but I would not consider ourselves as cowboys. We would not go too bold, right? But we will make sound investment.
Not going too bold, like conservative is for you what, 60%, 70%?
No, I mean, you can start
like
50
like
to 70. There we go. So yeah, like most banks do, but most banks do not bank the demographics that our clients bank, for example. So it can be ethnic communities, right? It can be
of course. No, I'm just talking LTV ratio. I'm not talking about
right.
demographic.
But again, so loan to value ratio implies that there is an asset, an underlying asset, right? Yeah. So a lot of people that you see here, like Sergio and others, they are in unsecured lending, right? So unsecured lending doesn't really have a loan to value ratio. However, they have a ratio of what proportion of your salary,
of course,
your paycheck.
I get you. Thank you very much.
Mm-hmm.
I get you. Okay, yes, Tim.
Yeah, I'm not in banking, but I'm excited about this. What I see is flexibility and power and speed and a lot of services like that. My question is about the capability. There's a class of human being called a digital nomad, and these are guys who work on the computer, but they travel around the world and they go where they're treated the best. Can you guys give me some examples of how a digital nomad, somebody who has to deal with banking systems in every country, and how would the services benefit someone like that?
So I think this question would be addressed to our clients because they provide services to consumers. So
yeah, we have engineers all across the world, from California, Mexico to some parts of Eastern Europe, and that was quite easy. So we never had actually any physical office when we started. Never, not for is single day. So, and all the
Don't have any problem operating in multiple countries and
yeah, no, it's absolutely, and we hired people everywhere, so not necessarily this part of the world. We try to sometimes move like engineers like within the same like time zone, because sometimes it's easier, especially like for support, like technical support. So, but we never had, and many other companies, so we're not alone. So I think lots of companies, like big ones, probably operating like hundreds of engineers or maybe more, like operating this way. So this is not unusual. So I think since pandemic especially.
So mBank has a very large correspondent bank network, right? And being able to seamlessly interact across the globe is really a non-issue. You have a credit card, you have some type of peer-to-peer payment system, and being able to connect with local vendors, it becomes a very frictionless experience. So the infrastructure that's out there, being able to use a global network of any kind of financial institution is really provided.
That's key. That's key. Infrastructure is key for we'll work globally.
So our approach would be we basically would enable our clients to be successful. So, and our clients are the ones who would actually offer the service, right? So we always try to think out of the box, right? So where else do we need to establish presence? Where else do we need to find a partner bank or a licensed sponsor or what have you? So, and then we will develop this and deliver it as a joint value proposition most of the time with our partners back to our clients.
probably 10 times faster than Wells Fargo.
Oh, 100%. That's for sure.
At that point, it just becomes a ledger swap. So
Right.
it's all internal.
I have a question. So, with the loans on the pay, so I'm an employee. I'm an employer. I want to offer that service to my employees if they're short of cash that week or whatever. You say you don't charge interest, but do you charge the same fee to everybody?
Yeah, it's the same fee to everybody. So it's
No matter if they make $1,000 or $3,000.
Yeah, it's the same fee. It's normally like a monthly plan. So we have like two simple monthly plans that an individual can choose, and depends on the set of features which are included within that plan. So it could be cards, it could be other benefits inside it. So and we charge like $10, $9.99, which is like
That's it?
to Starbucks, and then you can
Wow.
advance, up to 100% of your paycheck.
So it's fairly nominal.
Well, but
I think so. Yeah, I think for the convenience, and especially that banks would not provide them, and then, well, that's a subscription. That's a monthly plan. That's what we do. We have a very low, extremely low default rate, which is extremely low, right? And that's it's less than 4% basically, the final loss on the 28 days delinquency. So which is we see your history, we understand. It's for me like virtually taking the risk of Walmart or Amazon, for that Walmart and Amazon will not pay that person the next salary, so I don't get it. I don't get that check back.
Right. So what's your cost of capital?
It's a good question. So we actually, since the product is very fast moving, so it's we do not need a lot of capital for that, but we're working right now on borrowing, like getting like from some capital providers as we need to scale, and that would require some capital. So cost of borrowing would be, well, depends for us in particular, because we're very early, like we're only 1 year on the market, so that would be probably like low teens.
So you have to be then charging effectively 20%.
Unless we do it less than $35.99, so be below that magical 36% as the sort of federal cap or potentially federal cap.
Yeah, you get regulated if you charge even if you charge fees that can be perceived as interest, and it's 36% or above, you start getting regulated. So you have to stay below this.
Yeah, many states, most of the states have like the 36% cap.
Okay.
Like some user,
Okay, we move to another question.
Vlad,
What do you fear about the most about tomorrow? Like the competition, technology, the government, or the regulations? Which you feel like tomorrow, okay, fine, I wake up tomorrow morning and think, what will be my business?
Well, let me tell you what I'm a little bit afraid of, and again, like, it's not non-political. I'm afraid of more government. If there's more government, then there will be. Right. Yeah. So I can tell you, when we just started, when we got going, I think a few years ago, certain things were in appearance easier, right? Because the rules were simpler, but then there was a little bit less complexity in the overall market. We didn't have the FTX fiasco, but now what's going to happen, which is everybody's nightmare, because of this, the regulator will start over-regulating, right? So, and it's a fact. We just cannot escape from it. So, and I promise you that when we wake up on January 1st, there will be a lot more government, there will be a lot more regulation. Is it going to help us, or is it going to help end consumers? I don't know, but definitely we will have, it's good for us because we provide compliance as a service. So probably it's going to give a boost to our business. But would I want it? Would I wish for it? I don't think so.
Of course not. And it's going to happen. It's happening all across the board, from Bitcoin to fintech to everything, to cannabis to everything. So how do you survive, or how do you thrive? Do you have a backup plan? Do you have a contingency plan? Do you have how do you survive? If I was in your shoes, I would have a war room, discuss every day with people, how the hell do you survive or thrive? Forget about surviving. We don't want to survive. We want to thrive. How do you do that? Just briefly.
I'm assuming this is the last question?
Any one of you.
Oh, okay.
Go ahead, Rachel.
I would say for Carbon Blanc, we're preparing for a bunch of ESG regulations coming down by 2025, and we're there to be an unconventional way for companies to be able to meet those requirements, because companies are generally thinking about, okay, I'll change my vehicle fleet to electric vehicles, or I'll build a LEED Platinum building, but they don't think about banking. So we want to get ahead of that and be like, hey, we're here and we're doing that. So that's
good point. All right, who else? Yes.
Just a couple questions. I get it that you can reach, your technology allows you to reach underserved communities. And younger generation is 150 years younger than me. But given the economic conditions we're going into, high interest rates, more regulation, by the way, I guarantee you that it's coming. What's the outlook for your business? And if I was investing in your business, I'd look at two things: profitability and growth. So what's the perspective on growth given what's happening?
Well, it's for us, in the consumer fintech, and in particular in the space we are with the early wage access, with the inflation going, people will eventually need to, unfortunately, to stretch the budget somehow, because houses, no one buys houses, rent will be growing, people will need to spend more, prices up. So I think in a sense, but we feel very proud that we can help those people, at least right now. So, and we see a lot of demand already. And, oh yeah, organic is out of the roof. It's just surging. So we see spike in organic traffic. And banks are going to stop servicing basically first customers, only focusing on returning guys. So in terms of, it's unfortunate, but in this sense, like going through this, weathering this storm, we feel pretty good.
One quick question: who's the lead regulator? OCC, Fed?
It's well, since we have a licensed sponsor bank behind, so that would be OCC and Fed. So they're a member of the FDIC. Yeah.
So I can tell you, so most of the license sponsors, they have to be Durbin exempt to be able to support debit programs. This is when we can bank the interchange. And so those ones would be typically smaller community banks, regulated, state chartered, but their primary regulator might be, like in most of our cases, would be Federal Reserve Bank.
Yeah, thank you. Who else? Alan.
So as I understand it, NBank is the foundation as a service to the other institutions. And then each of your businesses, you apply another service on top of that. And you said earlier that one revenue source is your data. The question is, does NBank aggregate all the data for everybody, but your data is yours and your data is yours? How does the aggregation of data get divvied up amongst your 50 some odd clients or what?
Well, we don't touch the data, so we keep the ownership of data and ownership of consumer with each one of our clients. So we do, however, receive anonymized data for fraud monitoring, for example. So we do that, but that is not ownership of data. So we allow each one of our clients to monetize their own data. So because ultimately the data needs to belong to them, and they need to be able to monetize it. So we fully enable that.
They market, advertise, and draw in customers. Those customers are theirs, even though it transacts through your underlying foundation.
Everyone has its own core system. So every bank has its own core system. Every client finds their own
They're
core
all in
system.
silos. Got it.
Yes.
Hello? Okay. So I'm starting up a digital bank, right? And we're in the implementation stage with NBank. Just off my head, I want to ask, at what point do you think my business will become profitable? And how many number of customers do you think I will need to move to profitability?
So we've done some studies on that, and we basically believe that, well, so first of all, each business model may be different, you know, so, and I can tell you that and then consumer fintechs are different from those who are business focused. Typically, we would say for a consumer fintech, you need to start with 1,000, you know, you need to have 1,000 clients or 1,000 consumers. So, and then you need to always have in mind a path towards profitability, right? So it doesn't work if you come to us and say, hey, I want to build the best banking experience in the world. It's all going to be free. You can do this, that, and the other. If we ask you a question, so how are you going to make money, and you don't have an answer, I think it'll be a very hard journey for all of us. But if you have a path towards profitability, and even if it's a simple path, I would say that you should aim to have at a minimum 1,000 plus consumers.
Yes.
Quick question for the bank folks around functional business model and risk management on that side. Correct me if I'm wrong, but you rely a lot on external service providers.
Could you speak a bit louder, please?
Yeah, sorry. You rely a lot on the presumably other outsourced service providers and folks within the space, be it custody, be it administration, IT security, various pieces that you might not have expertise in.
Right.
As you're growing, are those service providers a large portion of the current business model? And if so, how do you hedge against the risk of either, amalgamation, monopoly within those providers, or more so, I think more critically, is disappearance of some of those critical players from the ecosystem? How do you hedge that?
Well, we do. So we have a wide range of partners, and some of our most beloved partners are also in this room. Temenos, thank you very much for your support. There's a couple of people from Temenos there. So I would say that the way that we've grown is through embracing this partnership model. We have to have a lot of partners to be able to deliver best-in-class solutions. Now, we are also focused on services, right? So we know that there's very little by way of competition as far as the services are concerned. I think there are many ways where companies like ours compete, but I think that as far as the breadth of service portfolio and as a service value proposition, as we call it. There's almost nobody that does that way. How can we deliver it? We deliver it through our relationships. And oftentimes, for each one of our clients here in the room, we would have 15, 18 partners that we bundle into one contract and deliver it as a one simple contract to our clients. Now, what if somebody goes bad, right? So it's possible. I mean, we're trying to stitch together best of breed innovators, right? And you may assume that some of them can go bad. But to be honest, right now, the quality of innovators is so high. They're very well funded. They're profitable. And we select only profitable ones, not the ones that fly by night, not the ones that present good PowerPoint presentations, but actually that mean something. They have something. They stand for something.
Perfect.
Good, very, very good question, by the way.
Okay, one more question. Josh?
Yeah, so the question is about the lending as a service, and are these companies differentiating based on their credit worthiness models? You know, you talked about, the big banks are doing credit score, you're doing employment, you talked about identity banking. Is that how they're differentiating? And if they are, what does the future look like? How far are they differentiating? What are these models going to look like?
So so after this we have some networking, and then we come back for just lending as a service. So we'll talk about it. I can tell you that we enable any type of competition. So we want to enable competition. Let's put it this way. I mean, we bring a lot to the table, starting from compliance and money, because you have to have money to be able to support lending as a service. But at the same time, because we want everybody to be successful as our clients are, that drives our success. Right? So we want you to be successful. We want you to be successful. We want you to be successful. So at the end of the day, we will support them being competitive in the market.
Love it. All right, we're going to take half an hour break and come back at 7, where Vlad is going to go a bit more in detail about how they make money, how to achieve profit, etc. In the meantime, during the break, I'm going to sign my book in the back, which I recently written about how you build a business, scale a business, exit a business, negotiate a deal, everything. If anybody's interested. And that's it. We'll see you at 7 o'clock.